Good morning, everybody. My name is Brian Wagner. I'm the Chief Architect of Prodigio RTS, and today we're going to have a chat talking about a tick fade strategy. Specifically, this looks at tick and some variations of the SPY, etc. Today, I want to kind of focus in on what you can do with various combinations of the forming bar and the 5-second OHLCs. This is going to be a strategy discussion, but it's also a really great introductory video as well. If you're seeing Prodigio for the first time, you're going to learn some things that are pretty cool and basic, yet at the same time, I'll show you how you can actually build something that's a pretty clever strategy. I want to start off by saying, join us on the web, www.prodigiorts.net. Every video archive that we have each week at 11 o'clock Central, 12 o'clock Eastern is archived in the video archives. Usually it's myself talking either about some introductory material or talking about strategy development. But that's there. If you have any questions about the Prodigio software or platform, send those questions in to prodigio@thinkorswim.com. Also, I encourage you to join us in this chat room during the day, and we usually have a presence to answer some questions. Prodigio is the automated trading platform available exclusively by Thinkorswim and TD Ameritrade. You can use Prodigio in order to build rules and strategies which act as market scanners that interpret technical analysis in order to generate trading signals. You can harvest these trading signals by setting the system up to trade robotically, or you can assess those signals using the Trade Optics queue. It's a really great system. There's a lot of things that you can do with it, and we try to kind of teach everybody some tips and tricks slowly over time, and it usually accumulates. It's usually why it's a good idea to kind of check out these video archives or to ask questions or jump on prodigiorts.net and ask some questions in the forums, etc. We are constantly building the system. There's a lot of features that we're working on, and you should expect those to be coming in an incremental basis. And if Prodigio, if you want to see new features or have suggestions for Prodigio, you can send those in to prodigio@thinkorswim.com. Okay, so we're going to talk about this tick fade strategy. And the idea here is that I've got Prodigio, and I'm looking at two specific charts. I'm looking at two 5-minute charts, and one of these is dollar tick, and one of these is UPRO. Now I'm going to change this back for a moment. I'm going to change this to the S&P. So I changed my symbol index on the bottom chart to SPX. The idea behind this tick fade strategy is that the symbol dollar tick, and I'll show you how you can use dollar tick specifically in a Wizard Lab rule. This measures at any given time in the market the number of upward ticking stocks to downward ticking stocks. In other words, it is a broad market scan that looks at, now this is the NYSE tick, so it looks at the New York Stock Exchange, and it counts the number of stocks on the NYSE that are ticking up versus the number of stocks that are ticking down. If it's ticking up, that counts as a +1. If it's ticking down, that counts as a -1. So you look at all of these stocks and you sum up everything, and that's going to give you a number. And that number is going to be either greater than 0 or less than 0. Now right now I'm looking at a 5-minute chart of dollar tick, and you can see that it's forming a bar, and the close price right now is -420. What that means is right now the sum total of stocks upticking and downticking is -420. And what that means is it is a negative bias for the NYSE. That means more stocks at this given point in time are moving downward than are moving upward. And you can use this as a broad market scan in order to determine the almost instantaneous bias of the stock market that you're looking at. We're going to use this to our advantage by building a rule and a strategy in Prodigio to create kind of scalping trades using some powerful ETFs. So you notice what I'm looking at is the SPX, and I want to point out a couple things. When you look at the tick, there's certain extreme values, and I've got a split chart on Prodigio. I did this by going to my layout, selecting the advanced layout, and I created a new chart and I dragged it downward so I can see this kind of side-by-side comparison. The dollar tick has extreme values, and the thresholds that we're going to be paying attention to are above 0 at positive 1,000 and below 0 at negative 1,000. Now these are usually pivotal moments for the market if you're looking at dollar tick. And one of the things that Peter Resnicek of Shadow Trader was talking about the last time we were talking about this is that when you're looking at dollar tick, or there's also dollar tick Q, which is for the NASDAQ, if you're looking at these, they have their own characteristics. Since this is looking at the NYSE issues, this is going to have certain thresholds based on the number of stocks available on the New York Stock Exchange. The tick Q is going to be based on the number of stocks that are available on the NASDAQ. And this symbol, I think it was tick/Q. That's right. There's tick/Q. Notice the magnitude of this chart is slightly different than the magnitude of the NYSE chart. So this one, if I scroll back far enough, it's got its peaks and its troughs. Here's one where it goes up to a high of 569, which that's not maybe the absolute high. Here's one where it's at 654, and it might dip as low as, let's say, negative 761. So they have their own unique characteristics, and you want to look at charts and get a general idea of what these characteristics are. Well, let me flip back to the dollar tick for a moment, and you can see that this magnitude, it's slightly greater than the tick Q. Right, so here we had a high of, and this is 1,336, 1,179, etc. And then we've got some lows. I can take a look at this low, and it's around negative 1,107. Well, the strategy dictates that when it reaches those magnitudes, it's an apex or inflection point. And what that means is, since those represent for the broad market points where it's kind of meeting support and meeting resistance, in an intraday almost scalping scenario, that those are good opportunities to take the reverse side of that position. Now I'm going to be demonstrating the basics of the strategy, but you can always take the strategy and you can add your own rules or filtering conditions into the strategy to simplify it or to make the actual trading a lot more accurate, if you will. I'll give you, for instance, the market has been moving down. Now I haven't checked it yet today, but it's still continuing these bearish moves. So one thing in Prodigio, if you're going to be shorting stocks, and you can also long ultra short ETFs if you're an IRA account. I'll get into that in a minute. But if you're going to be shorting stocks, you can create rules in Wizard Labs Rule Builder that have filtering conditions, and they look at things such as the long-term moving average of a symbol. I can do that by, well, let's create a new chart, and I actually want to look at SPX, and I'm going to look at the dailies for a minute here. And notice what's happening on the dailies. You'll see that there is a strong reversal right now in the negative direction. And if I put just a simple moving average on this, and let me make it a little bit shorter just to illustrate the point. So I'm going to do a 5-period moving average. And I'm also going to make the line a little thicker just to demonstrate a little bit. You'll notice that the moving average, it's starting to trail downwards. And this is something that you can use Prodigio's Wizard Lab to easily identify. And you can create all kinds of filtering conditions that say things such as only short the stock right now. And so if you have a condition that says only short the stock when it's moving downward very heavily, then you can combine that with the intraday scalping strategy that I'm about to show you with the tick fade. If you combine these things, you can have a very powerful scanning and scalping system. So I'll close this chart, and I really just want to concentrate on the actual tick fade for this chat. Some of the other chats talk about broad market filters, and you can really check these chats out because the goal here is to present you with all these ideas, and we want you to combine them. We want you to take long-term filters, short-term filters, etc. We want you to run these in backtest. We want you to run these in trade optics and refine your automated trading. So I was talking about these extreme points in the dollar tick, and it's a little hard to illustrate based on just a 5-minute chart. Let me actually drop this down to 1 minute. And let me try to drop this down to 1 minute. What tends to happen, now let me try to line this up, 1156 and 1156. Here's the S&P. And actually, maybe if I zoom in, this will be better. You see how the SPX, it moves down from this point at around, let's take 1156. At 1156, the high price was 1249.35. So remember those numbers, 49.35. In the next couple of minutes, it goes all the way down to 43.45. Right? So it goes from a high of 49.35 down to 43.45. Now that's not a whole lot, but the idea here is this is kind of an intraday scalping type of move. And it's going to be looking for very long-term or short-term trade opportunities. And there's a couple ways that you can play this out, but this is what tends to happen. When the dollar tick reaches extremums, here you have a high of 978, there tends to be a reversal in the market, in let's say, the SPX. Well, with the SPX here, you can trade the SPX quite simply by trading the equity tradable funds that are related to the SPX. Here I'm looking at the index, but if I go up to the top chart and I plug in SPY, that's the standard equity tradable fund for SPX. And you're probably at this point, especially if you're using any systems for day trading, you're probably very familiar with this fact that you can use these ETFs to virtually trade the indices. And you can see how when this chart on the ETF, when it goes up, the index goes up. When the index goes down, the ETF goes down. They follow each other in a very mirrored fashion. And the movement, it's almost 100%. We've actually in the past done some kind of miniature analysis on the differences between these SPXs and SPYs, etc. And we find that the movement, it's much greater than 99% identical. It's not exactly the same, but it's higher than 99%. Well, the idea here is use the tick fade in order to determine pivotal points or moments in the big index and trade the index according to those extremums. So here's the strategy. On dollar tick, when we find that the dollar tick reaches its critical mass, we're going to take the reverse side of that critical mass. And the threshold we're going to start with is 1,000. Now I showed you a very good reversal where the threshold was 950. This is one of those things where you're really going to have to look at the chart and decide, well, I want to have less signals but more probability versus I want to have more signals and less probability. Right? So there's this inverse relationship between how you're going to want to trade the how you're going to want to trade the tick values with respect to the ETFs. So here's a high value, let's see, 1038. We're going to create this rule in Wizard Lab where we're going to find when the actual value of the tick crosses above the positive 1000 or crosses below the negative 1000. So this is how you do it in Wizard Lab. Now I have this chart down here. I'm going to tuck this off into the side right now. And you see it's pinned over on my right hand side of the platform. And inside Prodigio, you can use the futures in order to perform scanning. Prodigio, we're working on allowing functionality to actually trade the futures and to extend the trading into kind of the futures hours, which happens outside of the, obviously the equity market hours. But you still can, you have to kind of use the absolute instrument for now. You still can use, let's say, ESU1 to get the values for, let's say, the E-mini futures. And you can use this in order to make trading decisions, but we're working on the actual trading implementation right now in Prodigio. So pretty soon you'll be able to actually trade the futures and use the same strategy. So I'm going to pull back up $tick here and go over to Wizard Lab. And when we did this the last time, I was working with Peter, and we had a very good filter condition. I want to rebuild this filter for you now because it works really well with this tick fade. The filter condition said that the price of the underlying instrument, I can pull this back out. Let's look back at SPY. He wanted to make sure that the price of the SPY was within the range of the prior day. So in other words, he wanted to filter out conditions where, let's say, the market was breaking heavily in one direction. And now here's actually a situation where you're not within the bounds of the previous day. Right? So I'm going to show you how you can actually turn this on and turn this off. If I look at the SPY, that's well below the range of the prior day. When he built this strategy originally, he was looking more for situations, let's say, right here on July the 22nd, where a large part of this day was actually within range. Actually, the entire day was within range of the previous day. So here, back on the 21st, you see that the high is up here and the low is down here. This actually engulfs the trading activity of the next day. So in the original version of the strategy, he wanted to make sure that was true. In this version of the strategy, since we have kind of this bearish move, I'm going to show you how you can turn that on and turn that off depending on how you want it to play. And perhaps a good substitute for that would be, well, I want to just short stocks today, and I want to make sure that I'm less than the range of the prior day. That's one easy way how you can do this. So let's start doing this. I'm going to make the first rule, which demonstrates basically how to identify the tick fade. So there's the two parts to this rule. We want to short stocks when the tick rises above 1,000, and we want to long stocks when the tick falls below negative 1,000. I have to make two rules here because I need two strategies, and those two strategies, one's going to be going long, the other's going to be going short. They need to have two independent signals. Two different signals where one will fire only if it crosses above 1,000 and the other only if it crosses below the negative 1,000. So let's start by making those two signals. I usually do this. I usually go to my trade actions and drag out the signal. This is just by habit. Every rule has to end in a signal. So usually that's one of the first things I do is I just drag out the signal. And this is very important because this defines whether or not we want forming bar on or off. Now I'm going to save that decision until the very last step in the rule because it's always the last step in the rule which determines whether or not forming bar is going to be on or off. And I'll explain that in a moment, but bear with me here. I just dragged out the signal. That's like the period at the end of my sentence in my rule. Okay, so in Wizard Lab, the way that you work with rule building, and a rule is just something that's going to generate a signal, is you drag and drop studies out onto a canvas and you connect outputs into inputs. This makes Wizard Lab's Rule Builder operate like a script, and the script allows you to transform logic or do mathematics or perform technical analysis and combine all of these things together in a logical fashion so that it ultimately produces signals. The way I like to work with this is going left to right. So in other words, the system starts by looking at an input data, a source data, and in this case we're going to look at OHLC values. We're going to do a series of transformations that ends in a signal. And just like if you were writing a script, how you would write code from top to bottom, we're going to create a rule from left to right. Now the nice thing about this is there's no limitation on how you can organize this rule. You can go left to right, top to bottom, bottom up, right to left. It doesn't matter. It's just a series of connections. And that's the nice thing about the rule builder. All you have to do is connect these things together, and that defines the logic of the rule. Okay, so I'm looking for $tick rising above 1,000. So actually, I'm going to not use this OHLC. I'm going to use this single OHLC. And the difference is that single OHLC, it allows you to specify an interval, but also a symbol. And this symbol is very important because we are focusing on exactly one symbol, and that's the dollar tick. Now we're actually going to look at some intraday values. Right, so I'll drop this down to 1 minute. And the reason why I'm going to be working with 1 minute is because I am going to be using the forming bar parameter. Now back tests will work with 1 minute. And let me explain, since I've been bringing it up, what this forming bar parameter is. Forming bar is a parameter which aligns with what you see on the chart. Now I want you to visualize this for a moment. I'm going to put an exponential moving average on here. And all this is a moving average, but the speed of this moving average is faster with respect to the change in the market prices. The reason is because it weights the more recent activity more heavily than what happened in the past. So all you have to know is just it's a smoothing of data, and I made it very short. Now this is what forming bar is. You see the values at the end. You see that red bar just became a green bar? Because when it got the update, that bar is still forming. This 5-minute bar is still inside of the interval. That interval starts at 12:20 and ends at 12:25. And as the prices change, you can see this close value changes. Well, as this bar is dancing up and down on the chart, watch what happens to this white exponential moving average. Right now, you can see the value here. It's highlighted, negative 616.48. As the bar changed, this value changed to negative 677.48. So the value itself, it dropped. It changed before the bar closed. And this is significant. The reason why this is significant is because you see all these values backwards in time on these 5-minute bars? These values are not changing. Those are fixed with respect to time, and they're not going to change because they're locked into place. And so these values are very static. Except this one right at the end here, that's dynamic. That one is still changing. It hasn't finished up yet. And the distinction between whether or not you want to use the value that has finished or not is what we call forming bar. Now there's pros and cons to using forming bar. The pros are that it lets you operate scans at precisely when the values come in and are updated. Now these dollars tick scans, I believe they get updated, it's something like once every 7 seconds. And this comes from the market. All of these dollar tick, dollar ADD, etc., these are broad market scans that get updated from the markets themselves, from the data feeds themselves. And the resolution of these things is usually around every 7 seconds. They do a scan of all the stocks in the market. They find out the sum of the upticks minus the downticks, and they produce a new value. So every 7 seconds this value is changing. And the way that the Wizard Lab Rule Builder works is it lets you pick whether or not you want to use the changing value or only fire signals off of the closed values. Now you see this value right here to the left of the forming bar, that is the most recent closed value. And if you were using a Wizard Lab rule with the forming bar off, the current value is going to be right here. So for the exponential moving average, the current closed value is negative 422.97. That value is different than the forming value. This forming value right now, the EMA is at negative 241.48. That's going to remain the forming value until 12:25. And at 12:25, that's when the bar is going to roll over. That EMA is going to lock into place, and that is now the most recent closed value. It'll roll over into the next 5-minute bar, and in that next 5-minute bar, as it's forming, that will be the currently forming value. You specify whether or not the system uses the forming values versus uses the closed values by using this forming bar parameter on or off. If you turn it on, the system is going to evaluate itself every 5 seconds. And every 5 seconds it's going to use that forming value. If you have it off, it's not going to fire signals until the bar closes. Now, why wait until the bar closes? Well, there's a couple reasons, right? So the pros of forming bar are that it can react quickly to markets. However, here's the cons, which are the pros of not using forming bar. They're kind of opposites. The cons are that you see how wildly tick moves on this chart. Well, this value dances quite a bit. This value dances up and down a lot. And the same thing happens with oscillators. If you have an oscillator, such as an RSI, those RSI values will dance around a lot during the evaluation of the forming bar. And what can happen if you fire a signal off the forming bar, that signal can fire, and when you look back at the charts later on that day, you're going to say to yourself, wait a minute, that RSI didn't cross 70 here, or this value didn't cross my threshold. That's because when you're looking back at the chart, you're only looking at the fixed values that were evaluated at the end of the bar. Right? So while I was talking, this value, this locked into place, right? This big green bar, and that moving average locked into place at negative 62. But remember, I was saying that that value is like at like negative 400, negative whatever. This value dances around. And if you are trying to run strategies in backtest, or you're trying to analyze your trades at the end of the day, it might be confusing using the forming bar. So this is something that you have to decide, do I want forming bar or do I not want forming bar? Well, for this dollar tick, I am going to use forming bar. I'm going to use forming bar with the 1-minute bars, and this is simply because my strategy is of a scalping type of strategy. Right, so here I'm going to start with the single OHLC. I'm going to do interval 1 minute, and I'm going to turn this on just to make sure that this rule is saved with forming bar on. And what I want to do is I want to find the opportunities where it crosses above positive 1,000. This is how you do that. It's very easy, actually. I'm going to go down to my toolbox of logical operators. And we have a series of operators that handle crossing of values. And so this is going to be my cross above rule. So I drag out my cross above rule. And what I could do is I could say, tell me when the dollar tick crosses above some value. Right, so I'm going to send this into input A of the cross above study. And as input B of the cross above study, I'm going to use constant. And I'm going to use a constant value of positive 1,000. I send this output into input B of the cross above operator. And I can end my rule right there. Now if I save this, I can call this tick above 1,000. Right? So that's the name of my rule. When I save it, after I save it, it says, okay, it's saved, the rule is valid, it's ready to go. I'm going to tweak this a little bit, however. And I'm going to tweak this. Well, let me read this. It's almost like reading a sentence. It says, fire a signal when the dollar tick crosses above constant 1,000. But there's a little caveat here, and that caveat is that the single OHLC, by default, it's going to use the close price of the dollar tick. Now this is the standard that's used whenever you look at a chart, and you look at, say, Chart Trader Pro, and I say, oh, add a study, add exponential moving average. It's going to, by default, apply the EMA to all the closing prices. Right? Well, in Wizard Lab, you can change that. In Wizard Lab, you can say, I don't want to look at the close prices. I actually want to look at the high prices. And the reason I want to look at the highs is because all the little ticks that can happen during the formation of the bar, I want to look at all of those little ticks. And I want to make sure that I'm looking at the high price to find my crossing threshold. The way I do that in the rule builder is I go down to my study palette under the adapters, and there's a high adapter. And I can drag this out, and whenever you want to change rules in Wizard Lab, it amounts to simply reorganizing how everything is connected. Right, so what I've done here is I've changed the rule and I've reorganized it a little bit. I changed the rule to say, tell me when the forming high price crosses above the constant of 1,000. And I'm going to save this. Now I also want a rule that tells me when it crosses below negative 1,000. So I can tweak this very easily by starting with the same rule and kind of using this as a template. And instead of cross above, I want to know cross below. And I want to know cross below negative 1,000. So I put a minus sign in there, and that'll represent negative 1,000. Now I've got another rule, and instead of tick above 1,000, I'm going to save this as tick below negative 1,000. So I've got two rules, and these are the fundamental triggers for the tick fade strategy. Now I want to do a couple other things here. I had mentioned that when Peter built this strategy, he had kind of an intraday filter on. So I'm going to build this very quickly to show you how you would build this. But that I kind of want to deploy this to trade optics to kind of show you some signals coming through. That's not going to be firing today. And the reason is because if I look at this SPY on the dailies, we're not within the range of the prior day. We're well below it. So I'm going to create, and yes, that's a great point. I made a mistake. Thank you for pointing that out here. I made a mistake on this other rule here. So let me collapse that back in. That's very astute. Sorry about that. Let me open this back up. Oh, this is the old one actually. This was tick below negative 1,000. I made a mistake. I was using the high adapter. I want to use the low adapter. And that happens sometimes. Sometimes when you're building rules and creating logic, especially logic that is reciprocal of other logic, you want to pay attention to these details. That should have been low, because I want to know when the low price crosses below negative 1,000. Right, so I'll save that, and it's fixed. So that's much better. But like I was saying, if we use Peter's rule, I'm going to set it up just to show you how that's done, because if you saw that presentation, which I think it was at the end of April, this is really another tweak on the same strategy. It's kind of the same strategy, but we're tweaking it a little bit. He had this rule, and it's not engulfed by the prior day. Well, the way that you build that, let's start off with another new rule. Actually, Big Ben asks a good question here. If we're using forming bar on, why do we need the high or the low adapter? You really don't need it. However, the scans that Prodigio is doing, it has to scan a lot of things. So it's not on a tick for tick based scan, but it's very low resolution. It updates once every 5 seconds. It's possible that you just slightly miss the high or the low. It's not going to be by a whole lot. It's usually, if it ever happens, and it doesn't happen often, it would happen by, say, a penny or something like that. But you want to use high and low just to guarantee that you're actually getting the actual high versus the low. But you don't have to use that. If you're going to use forming bar on, you can just use the close. Okay, so here's the filter that Peter had built. He actually wants to make sure that the price is trading within range of the prior day. So the way that we're going to do this is we're going to compare the current value, and we're going to make sure that it's below yesterday's high and above yesterday's low. So let's use a couple logical operators here. I want to make sure that price is less than or equal to yesterday's daily. And now here's a thing to keep in mind. If I have forming bar on, right, then I want to look at the previous day. And this is actually something that we're probably going to tweak around a little bit to make this a little bit easier to work with, but this is where it's at right now. And I actually want to use yesterday's high. So let me pull the high price out here from the filters. And what I've created here is a rule which says make sure the OHLC is less than or equal to the previous day's high. Right, so the high of the previous day. Now, if I have forming bar on, this is correct. Right, so if my signal, and I am going to do this, if my signal is forming bar on, then that's correct. This would actually, and I'll just complete it just to illustrate. If I have forming bar on, this is going to be correct. And the reason is because when I look at these charts, the currently forming day is this one that hasn't finished yet. That's the current forming day. However, the current closed day, the day that finished, which isn't changing anymore, is yesterday. That's the bar that if forming bar is off, it's going to be looking at. And this creates a lot of confusion, which is why we're kind of making steps to maybe change this around a little bit. But as long as you're aware of it, there's no problem using either. If I have forming bar off, the previous day, this one right here, is actually the current closed day. And if I use the previous operator with respect to this day, that's actually going to be the day before that. So you want to be careful with indexing when using the forming bar on or off. A general rule of thumb, just to make this simple, is that if you have forming bar on and you want to look at yesterday, you do it like this. Right? You say the daily OHLC, previous one. But here's the thing. The rule of thumb is if you have forming bar off, you usually want to do this. Right, so what did I do there? I turned forming bar off, and I'm saying the current 1 minute OHLC is less than or equal to the closed daily high. In Wizard Lab, that's referring to yesterday's bar because we're not looking at the forming bar. All right, so we understand that's a little bit confusing, and we're going to probably make some changes to make this less confusing. But since I'm working with forming bar on, I want that previous adapter. So this makes sure that the 1 minute value is less than or equal to yesterday's high. And I'm going to create another rule, which is kind of the same thing, but it's going to make sure it is greater than or equal to yesterday's low. Right? So I can actually highlight everything. I can right click and I can copy. And let me just drag these up a little bit. I can paste down here. And what I'm going to do is I'm actually going to flip this logic around. So, I don't want to make the same mistake that I made before. I'm going to replace this high value, and I'm also going to use greater than or equal to instead of less than or equal to. Right? So I'll use the low. And I'm also going to want a greater than or equal to logical operator. So I'm just connecting these things together here. And I have the other side of that. I'm saying, okay, tell me when the 1 minute OHLC is above yesterday's daily bar. And I'm going to combine these two by putting a logical AND operator down. AND is probably the most common operator that you're going to use because it lets you string a bunch of conditions together. And I'm, in this case, chaining two conditions together, one which is an upper bound and the other which is a lower bound. Right, and so I can save this and I can call this as something like within previous day range. Right, so this is a rule, and when this is true, then I'm going to be within the previous day's range. And the way that you would make the original version of this strategy is like this. Every time I save these rules, I'm creating a library for myself. That library is managed under the My Rules box, which is on the left-hand side of the rule builder. I can reuse those rules that I made in larger rules. And so before, I had this tick above 1,000. Right, so I scroll down to tick above 1,000. I had this one rule, and see the icon here? You see how there's this my icon? Anytime you use a my rule, it's going to have this icon right here. Brian, why do you want to be within the previous range? Well, this was one of the conditions that Peter had when he was creating this strategy, because the real essence of this tick fade is that it's kind of a scalping strategy, and he wanted to filter away breakout and break down. So Peter actually didn't want to use this strategy on a day like today, right? Because it's of a scalping type nature. He wants to go long and he wants to go short kind of when there's a little bit choppy sideways movement. You can also do this by looking at, say, consolidation. If you have like tightened Bollinger Band ranges, etc., that's another way to look for consolidation. But that's what he was really looking for. He was looking for tight reversals when you're kind of bounded, and that's why he had that. So that's not going to be firing today because it's not going to be true. So I'm going to show you two versions of this rule. The original way, which you wouldn't get any signals today, but I'm going to show you a way that you can use it to kind of go short, and that's going to be the other, that's going to show some signals in trade optics. As long as tick is crossing, I might have to reduce the threshold to kind of show the signals. But I can combine these two rules together. I've got tick above 1,000, and I had this other one that I made, which was Peter's original rule, within previous day range. And all I'm going to do here is I'm just going to combine these together. I'm using an AND operator. Right, and what that says is these two rules are going to be firing signals. One, when it triggers, when the tick crosses above 1,000, and number two, I'm going to get a steady stream of signals as long as this filter is true. So the way you think of this is this rule within previous day range. Remember how I used greater than and less than? Let me open this up here actually. Here's that within previous day range. I used greater than and less than. Whenever you use greater than or less than, you have the possibility of generating a steady stream of signals. You can kind of think of it as you flip a light switch and the light stays on. Well, this rule right here, within previous day range, if that light switch, which is caused by this AND condition, which is going to flip this light switch, which is the signal, if it is toggled by these two greater than or less thans, that switch is going to be turned on sometimes, and it's going to stay there for a while probably, and then it's going to turn off. It's like when you go into the room, and when you go in the room, you flip the light switch on. You stay in the room, you do some stuff, and you leave the room, and when you leave the room, you turn the light switch off. That's how this rule works, and all these filter rules that use the greater than or the less than, they act like that. They act like flipping light switches. Converse to that, you have the triggering condition. Right? So tick above 1,000. Let's open that up. This has a cross above. Notice that's the key difference here between what I call a filter and what I call like a trigger condition. This has a cross above condition, which is only going to happen when the high price crosses above that 1,000. That's only going to happen at exactly that moment. It's not going to continue happening. So if instead of cross above I use greater than, I might get a steady stream of signals. And if you're really paying attention, in the prior version of the rule, we only used we only used greater than conditions instead of the cross above. Now that is a matter of preference. I mean, that depends on how you want to use the rule. If you want signals to continuously stream in, then you can use a greater than operator. But I'm going to change it up a little bit to be more of a trigger on my scalp. And so instead of using the greater than, I'm just going to use the cross above. And this really does not act like a light switch anymore. This acts as a signal. It's like it's a condition that's going to fire. It's going to trigger. And it's only going to fire once. Well, by creating a new rule that combines these two, I've got a filter which acts as a light switch, on or off, and only when this is on and I trigger a condition, when it fires, do I want to generate signals. And so you can start to see how you can build systems like this. You just create systems of triggers and filters. And you want to be careful here, right? Because typically you usually want to have only one trigger. If I combine two triggers together, that's only going to fire a signal if both trigger simultaneously at exactly the same time. But I can create a system that has one trigger and 10 filters. I can create a system of, say, 5 filters and no trigger, but I might get duplicate signals. So you want to think about how this is going to create your signals, and you're going to want to backtest and look at signals coming into trade optics. But as simple as that, and remember, I want forming bar on for this strategy. This is now my rule of tick fade short. Oh, and do I want to replace it? Well, let me give this another name. Let me call this tick fade cross short, right? Because I talked about that filtering condition. It's basically saying when the tick crosses above 1,000 and I'm within the previous day range, I'm going to want to go short. And I also want the converse, right? I want, if it crosses below negative 1,000, I want it to go long, right? So the way that you can do that is really simple. Instead of using above 1,000, I want to scroll up here and use my, let's see, my rule for tick crossing below negative 1,000. And I've got the other side of my rule. I want to save this as something else, cross long, right? And now I have my two scanning rules. I have my tick fade cross long, tick fade cross short, right? And the way that you would create these in the strategy builder is, this is step 2 of the Wizard Lab rule building process. You always have to create strategies because a strategy is the thing that you can deploy. So like a rule is like a part. It's a strategy part, but the strategy itself is the thing that joins all of these rules together, additionally joining maybe some orders for position management. And it's this strategy which defines how trading should happen. So for trade optics, that's only going to show you the scanning part of the rule. It's not going to pay attention to this management stuff. That management stuff is going to be for robotic trading. And if I deploy this to Prodigio RTS under RTS strategies, that's the robotic trading component of the system. That's going to scan the market for rules, get into position based on those rule parameters. So I'll give you an example. We said today's a good day to go short. Right? So here is tick fade short. I drag that scanning rule into the scanning rule part of the strategy, and I can specify how I want to manage this position. Now I want to go short here, right? Tick fade short. So you specify the parameters of the order, and you pick sell here too. And you want to use the final rule as your scanning rule. You can use any rule that you want actually, but you always want to use your most complete rule, and in this case it's tick fade short or tick fade long, because it combines the series of triggers with filters. Now I'm giving these kind of names. It doesn't matter. The system is, it's just like when you program a script. When you program a script, it doesn't matter at all what exactly you do. You really want to create a system that joins together everything that you want to do, and in the end you want to get an output that represents what you were trying to do. So I'm calling these things triggers and filters, but it's really just using the system in a way that I can benefit from. So here I've got a scanning rule which is the tick fade short. I'm going to create 2 close position management orders to keep it very simple. Here's an order rule, and I went to my management side. You see how this drags up and down? I went to my management side and I dropped in here an order rule. Now this order rule is always tied inversely to the scanning rule, and you can parameterize the way that this order is placed. So for example, Oh, and by the way, if you guys missed the earlier part of this, this video will be archived on the website at www.prodigiorts.net later today. That's under video archives. But when I'm creating a strategy, this management close position side, this order will be placed if you deploy the strategy to RTS trading and the system scans your scanning rule. If it finds a trading opportunity according to your symbol list and your risk parameters and decides that now is the time to get into position, if it enters a position, it goes short in this case, the moment it goes short, it's going to place a stop order for that position. And you can place as many of these orders as you want. And what we're going to do here is we're going to place a stop and a target order. Now, the stop order, that's your typical stop order type. Right? Oh, and this is a good question. Where do you link the signal to the symbol to trade? That's during deployment. So I'll show you how to do that during deployment, how to build a symbol list and how to link it. Here we have a stop order, right? And I've got type stop, right? And then I'm going to change this to target. A target is like the opposite of a stop. This is kind of unique to Prodigio, and it's something that's a very useful tool for robotic trading. What we're going to do, because we're going to be trading these ETFs, and these ETFs are going to have a fairly reasonable range to them. The stop, because this is a short position, is going to be 20 cents above where I get into the position. And notice this offset is relative. That's why we have this example here. When you run these strategies, it's going to be scanning a collection of symbols. And all of those symbols are going to have different market prices. For example, the SPY, which is the ETF for the S&P, that's going to be trading right now at around $130 per share. But if you're trading the UPRO, I believe that's going to be somewhere around $65 per share. Let's type that in there. What's that right now? UPRO. Yeah, it's around $65 per share. All of these order parameters are going to be relative to the market prices of those stocks. So in Wizard Labs Strategy Builder, whenever we define the parameters for a strategy, everything is always an offset. And that's why we have this example down here, so that you can easily say, you know, what a percentage is of something or what 20 cents is going to look like, etc. Well, since we're targeting some specific stocks here, some ETFs, we're going to put these targets at about the same, right? So I'm going to have a stop loss. I'm going to have a stop loss up here in the stop order if price rises up 20 cents, and I'm going to have a target gain if the price drops down to 20 cents. And they're very symmetrical. This is going to be my tick fade. I'm going to call this cross short because I think we kind of had these named earlier. This is my tick fade cross short strategy. Right, now the cross long, that's just the opposite. I mean, it's very, very simple. All you need to do to make this, because it's so easy to do this, instead of having tick fade short as my scan, I can replace that with tick fade long. And I want this to buy, and because this is buy, this automatically reverses the stop and the target. So you see the stop is 20 cents below, and the target is 20 cents above for long positions. I can save this as cross long, and I've got two strategies. And step 3 in Wizard Lab is backtesting. Step 4 is deployment. You can deploy this to RTS trading or to trade optics. And so here's trade optics. Now this is scanning some things right now. So I'm actually going to remove some of these scans. I'm going to take these off, and I'm going to clear my queue. All right, so now I'm empty. Right, I'm going to collapse this window, and I'm going to hit this button to clear. So I've got a fresh slate here. Now, actually, these aren't going to fire because of that range rule, but I'll show you how to get around that. Okay, so I had saved my two rules, tick fade cross long and tick fade cross short. Right? Well, what I want to do here is I actually want to deploy these on very specific symbol lists. So here's how you make a symbol list. You see how down here I can pick what list of symbols that I want to deploy it against? Let's make one of those lists. I go over to my quotes panel, right, and I hit this little edit button right here, edit the selected list. Now you can toggle between all of these quotes lists, right, and here's the NASDAQ. I can hit that edit button and I've got my symbol list editor, right? So for example, let's make a new list, right, and it creates this new list. It's called My List 3 because I had a couple other My Lists in here. I'm going to call this UPro, right? And I'm going to add the symbol UPro. I'm going to hit enter and then I'm going to hit save, right? I now have this list available, UPro. Right? Now, this is actually something that we talked about last time. UPro is an ETF which is ultra shares in the long direction on the S&P. This is it's a long-oriented ETF, and when you buy it, it's tied closely with the S&P, but the change in like the percent move, I think it's something like 3 times the percent move in the S&P. They call it ultra shares because they're kind of heavily long on all of this. Oh, and by the way, there's a series of import and export tools down here. You can input CSV files in here, and when you import them, you'll get kind of the list inside of here, whatever. When you have this list and specify comma, tab, or line, so I comma separated these, if I hit this add, it drops them in up here like that. So you import and export into this bay right here, and then you can add them in. So let me take these out. UPro is kind of like my long-oriented ETF, but notice this is a hard to borrow stock with good reason. There's also, I'm making a new list here. I think it's SPXU. I think it's SPXU. That should be the ultra shares short. And let me save that. So let me close this here. And UPro, let's see, ProShares, SPXU, ProShares, Ultra Pro, short. The way SPXU works is it works opposite to the S&P. And the reason why that's possible is because, yeah, see how it's going up very heavily right now? That's because it's doing the opposite of the S&P. This is an equity tradable fund where the investors are shorting the S&P. So the fund is comprised of short instruments. This allows you to purchase this stock and you don't have to short anything. So if you have an IRA, if you want to virtually short the S&P, you can purchase SPXU. And what you are buying is you're buying stock in a fund whose goal is to short the S&P 500. In other words, you're buying an investment in the fund that is inversely proportional to the direction of that investment. So it's a very, very interesting, unique thing. But you can go long on SPXU. So that's there. But right now, I just want to deploy one of these to optics and demonstrate. Now, UPro, right? Here's this tick fade cross long, and we've got the tick fade cross short. UPro, that's hard to borrow. So you won't be able to short UPro. In other words, you're only going to be able to buy it. So UPro is only going to work if I deploy this under tick fade cross long. And by selecting the symbol list and checking this off, this deploys this strategy against the symbol list of UPro. Now, this won't be firing signals because that within range, that's not going to be on right now. But that's how you deploy it. And here's the tick fade cross long, deployed long against UPro. Now, I had brought up SPXU before. Well, here's the thing, right? SPY is SPY. SPY is easy to borrow. So I can short SPY. So let's go back into my quotes panel. I'm going to make another list here. Let's call this SPY. So here's SPY. And I'm going to add this in, press enter. hit save, and I've got a symbol list that only has SPY in it. What I can then do is go into Trade Optics or RTS Trading, and for my tick fade cross short, I can deploy this against the SPY, and that will give me bearish signals or shorting signals depending on whether or not I deploy it in Trade Optics or RTS signals. Now you can play some games here, right? We talked about SPXU. You can create a long strategy that trades SPXU long but uses the short logic. So how you mix and match this is up to your particular trading parameters. Right? So it's very interesting. Now, I told you this wasn't going to give me any signals. Right? Let's tweak this a little bit, and I'm going to export these rules. I'm going to export tick fade cross long, and I usually give these names strategies so you know what they are. Exported, and then I'm going to open up tick fade cross short, call this strategy, and I'm going to post these up on the Prodigio RTS blog so that you can import these. Now I'm not going to export this because I'm going to kind of break this, right? I want to maybe see some signals, and it's, I'm probably also not going to see signals because, well, you never know. It's at negative 259 right now. We'll see. We'll see. I'm going to take this out. And I can take out that filter by simply removing it. Right now, if I wanted to put another filter in here, I could add it in here, take it out from my rules right here. So I have one here that's called strong correlation. So whatever this was, you see how easy it is to kind of drag and drop these in and out? Well, I just want to get rid of all of these right now. And I can do this two ways. If I save this, right, see I edited the rule tick fade cross long. If I save this, right, it saves this rule, right, tick fade cross long, and I can open up tick fade cross short. Oops, I want to take this out, and what I did was I removed my filter, right? So I want to save this, and I want to go back into my Trade Optics, and I want to make sure those get redeployed, right? So I want to remove it. I want to put this back on, and I want to remove this and put this back on too, because I edited it, I tweaked it, right? But we wanted to make sure that it got undeployed. Now the rule is scanning for conditions, and I can kind of probably undock this back. Right? Let me drag this down, and let's run for $tick. This is scanning for conditions where it crosses above and below negative 1,000. Right? Oh, this is a daily bar. So let's look at a 5 minute again. So this is going to be, bouncing up and down, and I probably would need to kind of abbreviate the length, the duration. Let's see if I can do this really quick. I hate to kind of break my own rule, but let's change this really quick. Just see if we can generate some signals. Let's see. Tick above 1,000. Let's try to make this 100. Save that. I'm also going to have to redeploy this. And it's also got to be a cross, so it's going to have to move in order for this to generate a signal. Right, let's save that. And let's redeploy these on Trade Optics. And redeploy this on UPro, right here. And hopefully this thing should start to cross, and hopefully I'll get some signals in here. And looks like this thing has to move a lot. It's right now the value's at negative 100, and it's going to stay down there. So unfortunately I'd have to probably wait until it bounces around in the other direction. But you can get the idea that this is how you can set up these rules with the forming bar. Oh, I also want to make sure that in Wizard Lab I have the forming bar turned on, because this is in order to create this strategy, this is something where I want to have the actual signals be evaluated during the day as this value is jumping up and down. Yeah, unfortunately this is kind of running away negative, but it might have actually crossed below the negative 1,000, which if I left it up maybe I would have gotten a signal. Oh well, but here's the strategy. I'm going to put this up on the blog, right? So go to www.prodigiorts.net, and we're going to have a new blog entry with the strategy exports, and you can go there, you can import them into your Prodigio, and you can begin playing with it. But that's about it. So that's the tick fade strategy. I hope that you kind of gained a little bit of insight as to what this system is and how it works. I'm going to wrap up by saying join us on www.prodigiorts.net, join the forum, and also join us here during this chat during the trading day. If you have any questions, we usually try to have a strong presence in this chat room. We try to answer that. But of course, always ask any account-specific questions to prodigio@thinkorswim.com. So I'm going to wrap it up today and sign off. Join us here next week where we're going to have another chat every week at 11 o'clock Central, 12 o'clock Eastern. Get back to the Shadow Trader broadcast. Yeah, hope you guys enjoy that. As always, my name is Brian Wagner, Chief Architect of Prodigio RTS, and I wish you all great trading and best of luck. Take care, everyone. Have a great week.